Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the energy sector penny stocks. They've been heating up here, and quite a few are in play right now. And so I'm going to try to go through this quickly. I know I take a little while, but I'm going to try to go through this quickly. EVEP here, it's in the bull zone on R sign Fasto. You have a pinched plus DI here with ADX. You want to see that green line cross above the black line like it did last time, signaling that breakout. These annotations are from the last run. That was this breakout here when this candle closed above resistance, and then we are looking for a break up to the 200-day simple moving average. That's the red line, and notice it ran all the way to the 300-day simple moving average. So that was a great run. It climaxed at the 300-day simple moving average. So I recommend everybody using our trading strategy and locking in gains when the share price is on a run and it hits that 300 simple moving average. You can always load above that level if it breaks out higher. Many times it signals the climax, especially when you have this many white candles in a row. So notice how it retraced. This was almost a full retrace from the start of this breakout, pretty much, and it formed this Eiffel Tower type pattern. But the share price did bounce off of the 100-day simple moving average down here. It formed basically a double bottom at that level, and then now the share price is back above the 50-day simple moving average, EMAs 4, 8, and 13, and the middle Bollinger Band. So as long as this middle Bollinger Band, the dotted purple line currently at 78 holds, a new uptrend could begin. That's how this one back here started. It closed above, it took a few days, and then it took off. So if it can hold that level, then it needs to get above the 200-day simple moving average. That's the next target. If it can close above that, then we'll be looking at the upper Bollinger Band and the 300-day simple moving average again. Notice there was a nice volume spike. That's always what you want to see when a stock is breaking resistance. There was a bullish crossover on the 8, 13, and 5. You want to see this pinched 12, 20, and 6 and 9 MACD crossover. Okay, take a look at GST. Congrats everybody. Big move today. Closed up 26%. Now R sign Fasto are both in the overbought power zone. You have plus DI breaking out here, and so this was a nice move. You know, it had been consolidating. It formed an ascending triangle pattern. Notice how you have the bottom down here, and then you have the ascending support, and then there was horizontal resistance. You know, it had made multiple tops at this level, and then today was the day it finally broke out above that level. So broke out above high close horizontal resistance, and it ran up to the next level, which was the 200-day simple moving average at 104, and actually closed above. So that does signal more upside potential. We want to see it stay above the 200-day simple moving average, and then the next level to break is this 300-day simple moving average at 113. If it can break that level and close above, it could run higher, and that could be the start of the next push higher. If it fails to break the 300-day simple moving average when tested, it could be a temporary top. The candles could consolidate for a little bit here before it works higher. It's got a nice uptrend going. The break above resistance, that usually signals that it wants to move higher. It just has to break through these two key levels, and it could see a push to higher levels. Notice that it was on a big volume spike today. That's what you want to see. Bullish crossovers on MACD on both time frames. Okay, so check out NOG. Another nice move today. It was a good move for the energy penny stocks. These annotations are from the last time I made this chart, and so yeah, if you look down here at the chart, it has retraced now. So it did break the key levels before. We were wanting a break above the 100-day simple moving average, and that did happen. Notice how it broke above this channel, and then it broke above the gold line, which is the 100-day simple moving average currently at 99, and then it worked its way back. It came back, it tested that level in the middle Bollinger Band. See how that lower wick hit the middle Bollinger Band? If you watched the last video, I explained how that can be a nice entry point for stocks that are in an uptrend because it's the bottom of the channel, and then the upper Bollinger Band is the top of the channel. The candle today is currently busting through the top of the channel, and it closed above the 200-day simple moving average. So if it can stay above 158, that's going to signal more upside potential. The upper wick on today's candle hit the 300-day simple moving average at 195. That is the key level to break. Above 195, you close above that, and it's off. It's taken off to the higher levels. You want to see that this candle stay above this 200-day simple moving average. Now that it's been above, if it drops below, the red flag is this unfilled gap below. It could drop down, test the middle Bollinger Band, and fill the gap. If it fails to break resistance here on the 300-day simple moving average, or if it fails to stay above the 200-day simple moving average support level, notice that there was nice big volume spikes, and yeah, it's making a really nice move. This could retrace back up to the threes. That's the look that it has here. It looks like it's it's filling the jar. It's working its way back up to this March and April zone. And so that's the it came down at double bottomed, and now it's working its way back up. And so yeah, so very cool. Gotta love it. Okay, check out FCEL here. This is fuel cell. Okay, so it had a breakdown. Okay, so this is why we say, you know, don't hold when the middle Bollinger Band breaks. It gets risky. That happened right here on the 9th. The candle broke below that signal downside risk. Notice also it broke below that 300-day simple moving average. It came down. It tested this 50-day simple moving average. It tried to hold it, but notice how it never got above that pink line. So it had been riding EMA 4 resistance lower. It got above right here, and then notice it bounced off the 200-day simple moving average. So this is the bottom moving average for all these moving averages. You have the 50, 100, 200, and 300. So it's bouncing off the 200. It's right here at the 100-day simple moving average at 172 and EMA 13 at the same level. So tomorrow it has to break above 172. Fail to break 172, and it signals more consolidation. Notice it's currently in a sideways channel. Okay, so you have a tight channel going right now, and so it needs to break out of the top of the channel. And if it can do so, it could make a run. The next target would be the middle Bollinger Band at 182. Once it turns that level back into support, it can get an uptrend going, like back here. You know, candles above the middle Bollinger Band, it's running higher. Drops below, this is where you short. You short right here, and then once it gets above 182, that's where you could take a long position. Now, keep in mind, once it gets above that 182, there's the two crucial levels right above, 195 and 197. Once it turns this blue line into support, which it failed to do right here, that's when it could really get moving. You know, if it keeps being resistance, notice how it's riding down. If it fails to break, then that could be the top. But you could possibly see a run from this 171 here if it breaks above up to that $2 level, which is some nice percentage gains. Okay, yeah, let's look at JONE. Okay, so Jones Energy, it's trying to heat up here. You know, it has RSI and Fasto in the 40s. You want to see them both get back above the 50 level. This has got you know, it has a nasty downtrend right now. It broke down, you know, once again. Look at the close on October 10th below the middle Bollinger Band. All right, it hit that level, failed to hold. What happened? Nothing but pain and suffering. Unless you're short, this is where you could go short. You know, where this is the safe. I feel like that's a safer level. People try to short up here, which you can do off the top, and you could take it down here. But it really comes all about, like, if you're looking for a longer term play. If the stock's in a downtrend, then it's a much safer stock to short. You know, you can short term here off the spike, and then you know, the reloads off of the middle Bollinger Band. So this would be where you would try to cover if you. Yeah, we could talk about that in a later video. But yeah, if you look here. The share price now is back above EMA's 4 and 8. It bounced down here and formed a bullish one white soldier reversal pattern, following 3 red candles in a row. So EMA 13 at 103 is the key level to break. If it can get above that level, if you see it break above that $3, then you're looking at the middle Bollinger Band. As you can see, last time it got above the middle Bollinger Band, it made a really nice run up to 170. You know, so this had a run from basically $1 to $1.70, which is some nice percentage gains. And so it could be moving here again. We'll see if it can get through resistance. If it fails to break that 103 or $1 turns into resistance, it could signal more downside risk. It won't be in play if it drops below EMA 4 at 95. Okay, let's look at ZN. ZN is heating up here. It's trying, you know, it's got the nasty downtrend, and so some of these stocks, you know, they've just been, you know, pain and suffering. And if you were long, you know, it's just been really nasty downtrend. Notice once again, in the first week of October, the middle Bollinger Band broke, and then the downtrend continued to try to get above here. It failed to do so, and then this candle right here signaled do not be holding if you're long. If you're short, you're loving it. You know, you short right here as long as the candles are riding EMA 4 resistance lower. Just keep shorting it. You know, there's no reason to cover until it gets above. Okay, so here would be like your cover day. A lot of people covered. You get the short cover rally, and it rallies up. But what it's going to come down to, once again, is this dotted purple line. Can it close above? Can it turn it into support? If it can, then it could get an uptrend going. If it doesn't, then that's going to signal more downside risk. It's forming a tight sideways channel right here, so it's been consolidating. This looks like a pretty solid support level. You know, I guess you could go to the top of this candle. But yeah, it's consolidating hard here. Really, the top of the channel is this 300 simple moving average, 300-day simple moving average. If it can break above that, which is lined up with that 204 middle Bollinger Band level, that's going to signal it's in play. And then you could see a run up to the 200-day simple moving average up here, which would be a nice 20% gain. That would be the next big level to break. Okay, let's look at ENRJ. Okay, this stock is trying to come off of oversold levels down here. You want to see RSI get back above 50. This has got an ugly chart. All right. So we've just been looking at it, and what we're watching for, and I just recommend everybody just that you just really, you don't even really want to mess with this until one thing happens. This is what, anyways, I think this is a decent strategy, is wait until it gets above this level, because if you don't wait, I mean, you could play the break between here and here, but it's been trading sideways for so long that really what it comes down to is, can it break this 200 and 300-day simple moving average resistance level? Once you see ENRJ above 34 cents, that's when it looks interesting. That's when you should be like, I need to take a look at this stock. This might be heating up. Until then, just keep an eye on it. This is what we call stalking our prey. You know, we've been watching it since this candle right here, you know, so it's been, you know, over a month now. We've been just keeping an eye on this thing. You know, it's been a few times. It's been trying to get above it, but it's failed. And so we're just still watching. One day it's going to bust above. It's going to happen. These people right here, they loaded. What they have is what a lot of the retail investors don't have, is time. They have time and money. And so they're just waiting patiently for this thing to finally take off, and they're going to make fat bank. And so, you know, what you do, if you're the little person, is you just wait, because you don't want your money tied up sitting here waiting for this thing to finally take off. What you do is you wait for the break above resistance, then you jump in and join the party. Okay, let's look at ESES. Okay, this one is up above 50 on RSI. It's here in the bull zone on Fasto. So this is heating up as well. You know, it has you know, it's been trading in a channel, basically between 120 and 170, and so, you know, in these channels you can get some nice trading if you play the channel correctly. And so the way you play the channel is you load off the bottom of the channel and then you sell off the top. And so, you know, for this, the load has been down here, you know, this 129, 130 level. Notice how it's been holding the 130 zone. That's been everybody's been loading off of that, and then now it's pushing back up. And what you have to do is you have to find the high closed horizontal resistance levels, you know, which are, you can see the peaks. All right, so then you've got the peaks here, and so if it breaks above 144 here, it could run up here to this 152. This would be the next top level, and then you have 160. And so so basically it could work its way back up to these prior levels. If it can get above the, I mean, all the moving averages, they're all converged right here. This is a major level. If it can get above 144, if you see the ESES trading above 144, then that's going to signal that it's in play, that it could break out higher, and then above 150 it could really get moving. If you look here at the descending resistance line, so it always helps to do that as well. You can see that it's making lower highs, and then once it breaks above that 156 level and makes a higher high, that many times signals that this pattern is broken, and then a new pattern could begin, could be the signal of the breakout. Okay, let's look at CLNE. Okay, so this stock is heating up. You've got the RSI here above 50, so that's always good. Notice how it was below, now it's above. That signals the chart's really heating up. You have Fasto in the overbought power zone, but you know, it's in the power zone. It's heating up. You have a pinched plus DI and minus DI. If the green line crosses the red line to the upside, it signals the bulls are taking control. So what happened here is it bounced off the bottom. Now, notice that there's the P-star bull flip over here. There's a gap on the chart, and so it's down here trying to fill the gap. Okay, so that's the bottom of the gap right here, and then the top of the gap is up here, the bottom of this candle. And so at 235 is the top of the gap, and so once this runs to 235, that gap will be filled, and so you have to see if that's a climax event, if that's going to signal a temporary top, or if it can break higher. If it breaks above the top of the gap, then you have the 200 and 100-day simple moving average at 240 and 245. Those would be the key levels to break. Really, right now, it's all about this green line. Notice how it failed to get above the 50-day simple moving average, and that was when the big drop happened. So if it can get above 229, then you're looking for the gap fill, and then the gap fill, you're waiting to see if it's a climax. It could bust above the gap fill, run all the way up here to the 200-day simple moving average, climax, and then pull back, forming a long upper wick and closing below the top of the gap level. That could be a very, it really could possibly happen because you have 3 green volume bars in a row. So be on the lookout for a climax type of event. It has to close above the top of the gap and turn it into support to head higher. Okay, look at LGCY. It's back above 50 here on RSI, so you want to see it stay above 50. You want to see Fasto get above 50. So this is right at that 50-day simple moving average again. It's at 155, and then notice right above it's the middle Bollinger Band at 157. And so yeah, just to keep in mind, if you're watching my videos regularly, I'm always keeping all the moving averages the same colors, the charts are the same, and that just makes it easy. So when I'm explaining it and you look at it, you know that the green line's the 50, you know the gold line's the 100. You know, you look at it, you know that dotted purple line's the middle Bollinger Band, and that way, you know, it makes the analysis quicker. And yeah, so basically, if it can get back above the 50-day simple moving average in the middle Bollinger Band, then it could get a new uptrend going. If it fails to break those levels, it'll signal continuation of this downtrend. You know, it's got a double bottom going here at this level. Okay, so notice how it hit down here, came up, hit again, and so it could get back above. Once again, it has the moving averages to break. You know, above the middle Bollinger Band, look at that 200 and 300-day simple moving averages is the key levels to break. You know, once again, that's some nice percentage gains between 155 and 178. So yeah, just keep an eye on that play there. We'll see if it can heat up. And then finally, let's look at CLF. This is the one stock on this video, in this video, that is not an energy sector stock. It's a materials and steel play. But yeah, it's just heating up as well. You have RSI in the bull zone, Fastos above 80. Notice how it's the same pattern as well, though. That this is what happens when you have the algorithmic computer programs in control. You know, the machines are covering, you know, 80% of the trading, and so really the little guy and gal are just along for the ride, and we're just following the charts. And so notice that a lot of the charts will look the same when they're in similar sectors or the same sector, very similar. And so hitting the 150-day simple moving average, this is the big level. You know, look here how many times it tried to get above it and it failed to do so, and it pulled back. So the computer program knows it's the major level. If it breaks above and turns into support, that signals okay, it's ready to run higher, and so that gets the buying going. So if they want this to run, if the powers to be want Cliff to run, they're going to let it close above that 50-day simple moving average, and that's going to be your signal to take it for a ride up here between the 100 and 300-day simple moving averages. It would have a good chance of running up to that 300 if it broke above the 50. If it fails to break above the 50, that would signal more consolidation. As long as it stays above 624, as long as it holds the middle Bollinger Band, this new uptrend is intact. So it's looking interesting here. We're going to see if it can break above resistance and make a run up into the 7s. All right, thank you very, very much for viewing this video. Please check us out in our new chat. You know, it's a great tool. It's also a really nice mobile app feature. We're putting out alerts. We're covering all the sectors, putting out educational information. Yeah, please join us. I'll put the link below the video. Thank you.